Good day to one and all. This is Dr. Sivaraman of iknowindices.com. Hope you are able to hear me. Okay, fine. Let me display the PowerPoint presentation. Asian session live market analysis on September 5th between 5 and 5:30 GMT. So we will track the market using the live market code page and also refer to that of the high low set for the day and also the current level and compare with that of the previous day using the net change. So thereby we will be able to understand what the players intend to do during the day. Then we will be able to easily take their trading decision. So let me display the link for the live market code page. So you can open it in a browser. I'll also focus the camera over that of the live market code page. Now currently Euro is trading around 1.4164, 1.4166, 1.4137 is the low, 1.4180 is the high, 39 pips negative net change is seen. So market is in the middle level. They have done a downward stop and also an upward stop and staying in the middle level. GBP is also trading around 6174, 6178. 6138 is the low, 6210 is the high, 39 pips negative net change is seen. So on Friday, we know that what happened for the non-farm payroll data release, when the data released was less than expected or there was no increase in that of the non-farm payroll and the market reacted positive to that of Euro and GBP and negative to that of US dollar to start with. So they gained the levels to 1.43 or around that level in the case of Euro and also 1.63 area in the case of GBP, and then subsequently they made the drop. Then that was the surprise, and you would have seen in FX Trade blog that many of the people are making the comment that the players created the market sentiment and acted against the traders. So this is what I've been telling all along, but people were telling that I'm a controversial person, and so my forecast is based on the conspiracy theory and things like that. But now people are able to realize that they are supposed to make the USD weakening move, and they simply made the USD weakening move for a brief time for about 15-20 minutes towards close of the European session on Friday, and then subsequently during the US session they started making the USD gaining move and gave the attribute it is risk aversion. Now you find that it is making further slide. So those who are bullish with regard to Euro and GBP might find it is a big surprise, even though the US data was much negative when compared to that of the market expectations. So when people expect something, the market behaves exactly opposite to that. It is not the fault of the traders. It is the fault of the overall market sentiment. So when the market sentiment is created, the traders freely take the buy positions when it appears bullish. That is why I always say that what appears is not true. The players create the market sentiments and act against that of the traders. That we need to understand very well. And also whenever they make a very quick move, understand that they are just gaining the levels or losing the levels without accumulating the positions, without accumulating much of a positions by circular trades. So people have understood to a certain extent that there is a manipulation going on in the market, and they say that big players and things like that are some of the players, but we need to understand it is a single entity. It is a collective move of that entire single entity, and that is bringing in the volatility in the market. Probably in the due course of time, people might realize step by step, and this I have been telling it from 2001, probably in 2011, people started making remarks about it. Probably in another 3-4 years, you might be able to see that such people who are manipulating the market could be vulnerably exposed. then probably people will realize what I have been telling it is not a simple story or something like that, and later on they realize that market is being manipulated. And probably even when they are caught in 2004, 2005, you will come across new people coming in and again manipulate the market. That is going to be the market cycle. Now coming to that of USD yen, it is trading around 76.74, 76.77, 76.73 is the low, 76.94 is the high. 4 pips negative net change is seen. When Euro and GBP are showing negative net change, USD yen is also showing negative net change. It is a contrarian move. And also in the case of CHF, you come across 1 pip negative net change. So the majors are showing the controversial move or the contrarian move. That is, Euro and GBP are showing USD gaining move. USD yen and USD CHF are showing the USD weakening move nominally. So as a result, you come across the drop in the case of the crosses. So Euro yen is showing negative net change. Euro CHF is showing negative net change. Euro yen is showing negative net change. GBP yen is showing negative net change. And all other yen crosses also showing negative net change. So when they do it like this for the week beginning, you can understand that a week beginning false move is happening in the case of the crosses. Whenever the volume dwindles, then the players focus more on that of the crosses. One of the reason or one of the attribute could be today it is a holiday in US, so Labor Day. So obviously the volume could gradually get reduced after that of the European session. So before that, the players are trying to handle the crosses. Now coming to that of the major commodity pairs, USD CAD is trading around 0.9857, 0.9861 and 9851 is the low, 9873 is the high, 6 pips positive net change is seen. And Australian dollar, ahead of the interest rate decision tomorrow, they already made the drop, and on Friday it was looking very strong around 1.07 and 0.755 and things like that, and subsequently they made the drop. Once the short sellers covered the short thinking that it will go to 1.10 level, they made the drop. So 1.059 to 1.0595 are the current levels. 1.0571 is the low, 1.0640 is the high, 51 pips negative net change is seen. So you find Euro is showing 40 pips, GBP is showing 40 pips, 44 pips and 40 pips, and Australian dollar is showing about 51 pips. It is leading the rally on the downside. So during that of the Japanese session, they started making the slide, making an upward move and a downward move and holding in the middle level. They are expected to make the slide, and they are expected to also make the contrarian move to start with during the day, and then subsequently start gaining the levels in the case of USD CHF and USD yen. USD yen, probably they are doing more of a sideways move around 76 because already they have beaten it up, down. So the volume has come down, I suppose, and they are expected to make only a brief downward stop and then go up, because I was anticipating last month that they could make a downward, a quick extended downward move before making a rise in the case of USD yen, but that sort of extreme move has not been seen, but they have done it only in the case of CHF. Again on Friday, before that of the non-farm payroll release, when the volume was very thin and all the traders were waiting for the data release to come in, they made a massive drop in the case of USD CHF and made a little bit drop in the case of Euro. As a result, they made about 350 pips drop in the case of Euro CHF, and then they gained it again. So on the same day, they dropped and gained in the case of CHF and also Euro CHF and GBP CHF. That you can understand how effectively they can manipulate the market. And the thin volume is seen, they can do the circular trade and make extreme move on the downside, inducing the long holders to liquidate and then subsequently gain the levels just like that, when even though the US data was negative to that of the market expectations. So this is how you find that people come to know about it. When all people come to know about that the market is being manipulated and the big people are there to do it, and there might be a vulnerable exposure of the players in down the line 2 years, and you'll be able to get surprised that the market is being manipulated and only a few people have accumulated the wealth. And this is not the first time that such manipulators are going to be exposed in the market cycle. You come across after that of the multi-year trend reversal moves, the players are caught. So I do not want to go into the details of it. So my focused algorithm says that the players are going to be vulnerably caught within 2 years. Let me focus the camera over that of the PowerPoint presentation. So expected market moves for today. During that of the Japanese session, swing and or a firming up little bit and then slide are the expected moves. European session, a quick drop and then firm up towards close of European session could be seen. During that of the US session, swing and drop moves could be seen. It is a holiday in US. If the volume is moderately good, then the drop would be nice. Otherwise, it will be a slow slide. And probably you know that most of the days they are focusing on USD CHF, giving a lot of stories about it and trying to gain the levels in the case of USD CHF. So again, like Friday, they could focus exclusively on USD CHF and try to gain the levels during that particular US session. So a brief week beginning false move on the upside could be seen. And you know that last month itself I told you that there is going to be a USD gaining move in the month of September. Now it becomes relatively visible. So this is how we need to read the market. Otherwise, small traders is extremely difficult to sustain in the market. It is not that easy just we go with it of the trend straight away, because the players create that artificial trend and act against that of the traders. But still, the multi-year trend reversal is in process. The denominator currencies have to reverse to that of the normal levels like USD Yen and gaining to that level of 100, and also USD CHF gaining to that level of parity and above, and also Canadian dollar gaining the level above that of the parity, and Australian dollar to go below that of the parity. Those things are expected to happen in this particular month till the completion of the sequential multi-year trend reversal moves. In that process, Euro and GBP might be making range-bound moves, and you might see one day Euro gaining, another day Euro dropping, and GBP dropping. That sort of moves could be seen. Don't think that Euro and GBP are expected to make a very big drop now, but the gains will be very significant in the case of USD CHF and USD Yen, and the players could be focusing more on that. So if you are in Euro and GBP trade, better do only swing trades. Don't expect 300 to 500 pips drop and things like that. They may drop 50 pips to 100 pips and then gain back, again drop about 50 to 100 pips, then gain back some. That sort of moves could be seen in the case of Euro and GBP in this particular month. Australian dollar is expected to make one-sided drop, and there you can take sell position. But Euro and GBP, try to do only swing trades. Now, with the rest of the days in this particular week, today is 5th, so I explained that there could be more slide happening during that particular day, and it is a holiday in US, so we have to see the impact of holiday in the market volume, and thereby we'll be able to determine what sort of moves could be seen in the following days. And tomorrow, 6th, the market is expected to firm up and again make the high level swings and gain during that of the US session. So Euro and GBP could gain tomorrow, and probably those who have got the mindset to do buy and sell trade after the drop, they can take the buy, and tomorrow US session you will be able to book profit. Again, Euro and GBP are expected to gain the levels to drop from that of Wednesday. So Wednesday 7th of September, they are expected to make the drop from that of the European session. And US session, there could be a drop. And Thursday, you know that the DOE and ECB are expected to announce interest rate, and that is 8th of September. And we could come across a very good drop in the case of Euro and GBP during that particular time frame. After the announcement, you will find simply the levels disappearing and levels come down drastically. And on Friday, they are expected to make a downward move to start with during the Japanese and the early European session. And from that late European session, they are expected to gain the levels again. So their Euro and GBP are expected to make the wide range swings during this particular month, during this particular week. And afterwards, they may lose some more levels from next week. So don't expect all the drop to happen in a single day or within a week. They are expected to make either way moves. So either way trading opportunities will prevail. So if you do a buy and sell trade, wait for 2-3 days, you will be able to book profit. If you take a sell and buy trade and wait for 2-3 days, you will be able to book profit as far as Euro and GBP are concerned. So small traders can focus on that, and it's easy to make money either way without any fear. But in the case of the other currencies, like the denominator currency, try to do only in the case of denominator currencies, buy and sell trade, and buy during that of the downward move and try to exit after keeping stop at entry, exit when they are making a quick rise using a trailing stop. Similarly, in the case of Australian dollar, after the interest rate announcement tomorrow, we could come across, or even before that, we could come across the drop happening in the case of Australian dollar. Now, some of the people are interested in gold and silver, so I thought that I can show the levels also in them. So let me just focus the camera over that of the gold quotes. So this is the link from that of Finbase, and I have shown it earlier also. So you come across the majors, their moves, and also in the case of gold and silver. But it is not frequently updated, so you may find a slight delay with regard to this codes, but you'll be able to understand easily the trend, and also you can just keep the mouse over it or the cursor and then see what sort of chart pattern is seen, and that's for a quick reference. So here in the case of gold and silver, they are doing the multi-year trend reversal in the case of gold. So it has come twice to that of 1,900, and they are expected to make one more attempt tomorrow to go to 1,900, 910 and things like that, and then subsequently they are expected to drop before that of the DOE and the ECB to announce interest rate. So it is in a multi-year trend reversal, and if you try to do sell and buy trade, probably you might lose your patience. And because whenever the multi-year moves are there, it's like on Friday how CHF made that drop. So from that of 0.81 area, they just dropped it to 77 area and then straight away gained to 279 now, and they are expected to gain back again. So similarly, you'll find that a quick drop from that of 1,900, they dropped it to 1,700, again gained back to 1,900, almost close. This sort of wild moves are there. $100 move, small traders cannot definitely withstand. Similarly, silver also from that of 39, they have come to 43 area, and they are expected to go up to that of 44, around 44, and then start making the drop. So gold could touch 1,900 briefly and then start making the slide, and this month the pullback will be very less, and during the course of the month you will come across gold is coming down drastically, and so we should be able to see 1,700 and below around that of end of this month. This is only an estimate and it can go wrong. Keep that in mind as a reference information based on my forecast, because you do the chart study and you do the statistical analysis, you arrive at certain parameters, or you try to arrive that this could be the possible move. Similarly, I have just done the analysis using my forecast model and arrived at a conclusion, or arrived at the concept that gold could drastically come down below that of 1,700. So keep this as a reference information, and probably if it comes true, you can be benefited. At the same time, when you are doing sell and buy trade, use the hedging order to limit the risk, and that is very important. And with regard to the calendar, today you come across it's a bank holiday in Canada and the US, Labor Day in US, so you find that not much of the trigger points are seen, but on Tuesday you find the Australian dollar, the rate decision is expected, and the expectation is 4.75, no change in that, and that is expected to bring in the volatility and downward move in that market. And also you come across ISM, and that could give the trigger for the market to go up tomorrow. Then Wednesday, also you come across DOC rate statement and overnight rate, and no change is envisaged at the moment. Then you find Thursday, September 8th, the asset purchase facility in the case of UK, and also official bank rate, there is no change expected. And also in the minimum bid rate, no change is expected from ECB. And then the ECB trade balance of US is also expected around 12:30 GMT, and also the unemployment claims and ECB press conference. So around that time, on 8th, you'll come across the market drastically dropping down, and again the trade deficit might be, they are expecting lesser than that of the previous time, but this could be more, but still they could show a move of risk aversion. Keep that in mind, that all the time they are not going to make the moves in tandem with that of the data. They can move against also. So that is why I want to show this. You find the ECB press conference and also the trade balance happening around 12:30 GMT on Thursday 8th, and they are expected to make a drastic drop in the case of Euro and GBP on that particular date. So let me minimize it and come back to that of the PowerPoint presentation again. Now coming to today's events, the initial lows and the highs set for today, 1.4137, 1.4180. They are not breached. The high, initial high and the low, which are being recorded around 3:30 GMT. Then GBP 61.38 is the low, 62.10 is the high. They are not breached. CHF 78.73 is the low, and 79.12 is the high, which is also not breached. And USDN 76.75 was the initial low, and they are breached. So they wanted to act. In the case of CHF, that is evidential. In the case of yen, that is evidential. It is still showing a contrarian move. When Euro and GBP are showing negative net change, USD yen is also showing negative net change. It could be a brief downward stopping or an extended move to drop the yen crosses and then try to gain the levels, because they are staying below that at the moment. 76.70 and 76.73 are the current levels, so they could extend it somewhere downward. 76.94 is the high, that is not breached. So they are isolating the currencies and focusing on those currencies in a particular day because of thin volume conditions. Then Australian dollar 1.0571 is the low, and 1.0640 is the high, that is also not breached. And Canadian dollar 98.51 is the low, and 98.73 is the high, that is also not breached. So only in the case of yen they breached the low. That may give for the trigger on the downside, and probably they can use some other story for the downward move in the case of yen. So they are choosing the time wherein the volume will be very, very less. Like before the non-farm payroll, they acted in the case of USD CHF. So you can understand the cunningness. No, there won't be much volume. Only those who are holding long positions will become jittery and liquidate. And fresh sell may not happen, or fresh buy may not happen. And then they drop drastically, and after the non-farm payroll, they gained it. Today is a holiday in US, and they are trying to act in the case of USD yen. So on the downside, they are doing it purposely. And if you are able to realize it, fine. Otherwise, if you think it is the strength and weakness of USD yen, that could be the perception. Let me minimize the PowerPoint presentation. and focus the camera over that of the live market code page and take up the questions and try to answer to those questions. Then trading. Do you expect USD CHF to make a big move in this week? Yes. USD CHF is expected to come up to 0.83 this week. Let us see it happens. But it can go wrong, don't blame me. And this is only a theoretical estimate. And we have to use the trading strategy to limit the risk. But sell and buy trade, avoid it, because when they start making one-sided gains, we may not be able to withstand. In TY, what moves can we expect in Australian dollar today since it is already dropped 50 pips? You know that they can drop about 100 pips and they have done only 50 pips, so another 50 they may drop in anticipation of no interest rate change, increase. Then M drive. The recover of the gap is firm up move in Japanese session or firm up has not started yet. They have done the drop and they firm up already and they are expected to slide it. Then jumbo. Do you expect Euro and JPY to have false move up today? Not today, tomorrow they are expected to gain and day after tomorrow they are expected to drop again. Because they do not want to drop one-sided in the case of Euro and GBP. You know that even though CHF was making such a big move on Friday, we did not come across big moves in the case of Euro and GBP. They made only about 100 to 150 pips from that of the high to the low. On either way, they made the stop in the case of Euro and GBP. They are expected to continue the same type of moves in the case of Euro and GBP. So that is why I said that whenever there is a quick drop, you can buy. Whenever there is a quick rise, you can sell. So quick moves are good trading opportunities in the case of Euro and GBP. Then Ahmed. You usually say if price does not breach low high for 2 hours, then buy sell can be initiated. However, in your blog on 2.9, you wrote, the traders are willing to buy near low set for today and the market stays near low for more than 2 hours, then we learn that the players are sellers. Yes. So that was an unusual situation. That is why I gave the remark. So normally when they don't breach the low for more than 2 hours, then they are supposed to gain the levels. But they wanted to make a downward move in the case of Euro and GBP. That is why I cautioned it. See, it is not only the market reading alone can help us to determine what sort of moves they are going to do and take trading decisions. That is why I explained very clearly, we need the market reading, we need the forecast and synergize them and try to bring out what could be the possible moves in the market. Still, we can go wrong. Hence, I focus on the trading strategy. That is using the hedging to limit the risk. Hope you are able to understand. So nothing is perfect. There are elements of error involved in all. Please understand that. It is not an error-free forecast or the market reading. Then Arun Kandyal. When we could see gold below rupees 20,000. You are talking in terms of Indian market. I explained it with regard to the international market. Because we come across international traders and from various countries are here. So if I give a local rate, probably they may not be able to understand. So that is what I explained with regard to gold, that from that of 1,880 current level, they could touch 1,900 by tomorrow and then start making that drop. Probably $1 or $2 above 1,900 or closer to 1,900, they may just show it as a high and start making that drop again. And always keep in mind, the slow moves are intentional moves. So when they slowly drop, don't buy. When they quickly drop, then you can just see that they don't reach that low for a session, especially with regard to the commodity market. You know that Hong Kong market and London market and New York market are very active. During that particular time, when they are not breached the low and staying near that of the low, for more than 30 minutes, you try to take a buy. And when they are near the high, not breached for 30 minutes, you can take a sell. And Jimbo, do you expect euro to stay in a range between 1,300 to 1,500, 1.45? Yes. So euro is expected to be in the range of 1.45 to 1.39, and GBP is expected to be in the range of 1.65, but they are shown 1.66 briefly to that of 1.59 area in this month, last month and this month. So that you can understand near consolidation, because they are focusing on that of the denominator currencies in Australia to bring to their normal levels, trading zone of 2002 2003 areas. Then MRX, this big downward move did not happen in USD yen. What do you think is a good entry point? That's what I explained, that today they could possibly do it, and they had breached the low only in the case of USD yen. All other currencies, they are making range bound moves, and already they have made the drop in the case of yen crosses. They could focus on yen crosses to make further extended downward move. And in CHF, other day when they dropped CHF, they dropped euro also to give a double edge effect in the case of euro CHF. It made the drop of about 350 pips. So that sort of move, they could do it today with regard to yen crosses, yen and yen crosses. Just because only in the case of CHF, they are cutting the low, and all other currencies, they are not breached the high or the low. So, and also it's a contrarian move. They could continue the contrarian move on the downside, which is confirmed. Now CHF has come to that of the positive net change, whereas euro, GBP and yen. So they could gain the levels in the case of CHF and drop the levels in the case of yen. You might be aware of last week they gained the levels in the case of USD CHF and dropped to 75 area in the case of USD yen to handle CHF yen cross. Similarly, you could come across a contrarian move between USD yen and CHF today. And in the case of commodity pairs, they are doing USD gaining move, which is again a controversial move or a contrarian move to that of euro and GBP. Then when they make a good drop in the case of USD yen, then understand the quick move stops for about 30 minutes to 2 hours, then you try to buy. And especially as far as yen is concerned, they are known to make very quick moves during either Japanese session or during US session, because predominant of the Japanese earning come from that of US. So there they will try to make a big downward move and then start gaining the levels. It could be a show of yen today. They have started making more slide. From that of a narrow range, they started making it as a, slowly they are expected to make it as a wide range. Then Francisco, if Australian dollar is poised to fall further this week, do you believe players will show 1.07 again? No, I don't anticipate. Because they are not supposed to give profit booking opportunity to that of the long holders, only then they can make massive drop. So that is why you come across whenever they want the move to be massive, they make one-sided move and they don't give profit booking opportunity. At any level you are taking a buy. And only then the massive drop can happen. Otherwise, either way swings will happen as you come across in the case of euro and GBP. So any level theoretically you buy and see whether you are able to book profit. If you are not able to book profit, then understand they are making one-sided downward move. If you wait for 2 sessions and not able to book profit of any level buy, I am talking about not scalping about 10-15 pips, about 40-45 pips, or keep it as an optimal level of 45 to 50 pips. And if you are not able to book such profits, then the longs will try to average it, and that average will be higher than that of the market level all the time. then they will come for the long liquidation. So when you are caught on the wrong side, how exactly you will behave? So that you just visualize it with regard to the market, and you will be able to understand how the players act against. Then Robert, after setting initial level in them, we find that the first cut and the low is Australian dollar and euro. Does that signal that the intention for the day or just an operation on the downside? We need to watch for 30 minutes. We need to always watch for 30 minutes, sir, because they sometimes set the low and the high. Whatever that low and the high they set before 3:30 GMT, they are trying to increase the spread between the low and the high. Then if they are holding near that of the low and not breach the low of the 30 minutes, then try to take a buy. If they are holding near that of the high, not breach the high for 30 minutes, then take the sell. Then they wanted to drop. Observation for 30 minutes will definitely yield you a good result, so that it will also control your impulsive action. Then Matthew, because sometimes we become impulsive and in a rising market we try to buy, or in a rising market we quickly enter sell. Later on we find that they further rise the market. So that will get avoided if you wait for 30 minutes. You'll be able to really judge where to enter. We need not sell it at the peak, but if you understand that they are not breaching the high for more than 30 minutes, and about 5-10 pips below that also we can take a sell, because we need an assured profit, not that the fine-tuned highest entry. I have not displayed any slide. I am only showing the live market quote page at the moment. I think it might be an earlier thing. And Robert, are we expecting the aggressive type of gain later in USD against all sleeping giant wake up? Yes. Towards the close of this month, you will find suddenly sleeping giant getting up in a very, very big way, and that can create massive moves in the market. As the month proceeds, you will find intensification of the USD gaining move, and that will lead to reversal. Then again the giant will go to sleep. Then money magnet, large stop and option barrier hunts are a clear sign of FX market manipulation. Yes, of a small group of traders with a deep pocket, because how else can these people and institutions move the market as large as the FX market, unless the FX market is not as deep as we all have been led to believe. See, I explained many times, third of the market volume is of the players. Currently you come across swings. You honestly ask all the traders in the world, are you taking positions for 1 or 2 pips profit and loss and things like that? Market continues to make the swings. How this swing is happening? So you find suddenly that euro gains about 5-10 pips and then drop. Euro gains about 5-10 pips and drop. Are the traders doing it? They are all taking 1 lot, 2 lots, or even 50 lots, 100 lots, and they wait for the market to drop or wait for the market to gain. So most of the time, the traders wait. So who is making all the swings here? And 2/3 of the volume in the market is because of this sort of swings, and it is not the genuine trade. They are also trades within the same group. I sell it and you buy it, you sell it, I buy it, and we are one single entity. That sort of moves they are doing it. There is no question of very, very deep pocket. Read it, and there are some remarks I have seen that trading against the country and things like that. And no player will try to do that. And you know how exactly USD CHF, they made the drop to 0.71. At that time, the intervention was not there. They allowed it to go. Then subsequently you come across all the intervention stories, then they gained about 1,500 pips. These are all, hand-in-hand understandings and action in the market. So ultimately, those who try to trade on a speculative basis or those who take the leverage positions, they are alone hurt. And those who go in for a currency conversion trade, they are not hurt. They can wait and they can reap the profit again. So, you have to understand, those who are doing the leverage trades alone are caught in the market. So it is not that the big banks and others, they lose it straight away. Those who are doing the leverage trade, they are only afraid of the margins. Okay, yeah, sir. What range can we expect euro today? Euro could be trading in the range of 1.42 to 1.41 area. MRX. What do you expect? A drop on USD-Yen? USD-Yen, the way in which they are dropping it now slowly, it has to intensify. Only the quick move on the downside can bounce back. So they are still holding below that of the initial low, 76.75. So if they slowly drop, then they may continue for one more day. Keep it in mind. If they quickly drop, then they can reverse. It's like a bouncing ball. So now they are making a dip in the case of Euro and GBP and also USD Yen, see, continuously. So that big fall could happen in the case of Euro Yen and GBP Yen. This is how they select the currencies depending upon the trader's spending position and act against the traders and earn their money. So if you have hedging, then you can really safeguard your interest. So purposely they removed hedging. So you can understand, they said that for the larger benefit of the traders, the hedging is not permitted in US trading platform. Now you can understand whether it is for the benefit. And do you think that we will close the gap in the Australian dollar today? I don't think that they could make for the slide, Matthew. Will Euro or GBP gain 100 pips from the current level? They may not gain today, probably tomorrow they can gain it. Then MRS, my friend is struck long at 1.49 euro with her robot. Should she start to make close out? Is there a possibility euro to 1.48? See, let me tell you, the robotic trading, there is a disadvantage with regard to the robotic trading. If it is a fixed type of market moves, then we can develop a fixed type of algorithm. Okay, so if the market drops this much and obviously it has to reverse or a quick move, false move, all those things you can incorporate it in the robotic software. But the thing is, the market is a dynamic environment. So from time to time it changes. And those changes, the software may not be able to understand because it does not have its own intelligence. So there comes the biggest problem with regard to the robotic trading or a simple algorithmic trading. So there, the change in that of the market climate is not being incorporated. So unless and otherwise, people are in a position to understand the shift in trading zone and the market climate, change in the market climate, like that of the climatic change in the world. So there might be a shift in the climatic change in the world. Normally you might be getting the rain in the month of June, probably it might get shifted to that of July. Then if you think that next year it has to come in the month of August, it may come in the month of June. So that is called shift in that of the climatic change. It doesn't get shifted permanently. It gets shifted and reverse back again to that of the normal climatic conditions. So that's sort of dynamic shift in that of the trading zone and also the market volume. If they are not taking into consideration, then probably this sort of robotic trading it may earn about 5-10 pips on that of the scalping and lose about 100 to 500 pips in the long term. When it is not using the stop and holding still 1.49 buy, that shows it is not a system. But if your friend can wait till next month and do one averaging after the drop, should be able to exit easily by next month end, in the month of October. It is a question of patience being rewarded in the forex market. Matthew, after Trump Australia interest rate announcement, with Australia start gaining the levels or losing the levels. See, I do not want to comment with regard to whether there will be an interest rate rise or decrease in the interest rate or no change. But I can tell you, Australian dollar is expected to drop. And use that as a trigger. In GP. Who are making volumes in the market? Say, let us not bother about it, sir. They are called players. That's what I can tell you. Among you also, there could be a player watching it. Hello, worries. Can you guide about Euro USD trend in coming session and for the week? So Euro USD, I explained that it could be trading in a range of 1.42 to 1.4050, probably today and tomorrow. So any level you buy, any level you sell, if you wait for 1 or 2 days, you will be able to book profit. That sort of situation is seen in the case of Euro and GBP. So let me go back to that of the PowerPoint presentation. So expected market moves, firm up is already over. The slide is expected in the case of Euro and GBP. I'm just giving it pertaining to that of Euro and GBP because I am interested in advising to the small traders to focus only on Euro and GBP so that they'll be able to earn nicely from that other market, because building your equity is the utmost important thing rather than speculating on various other currencies or wherever you come across extreme moves, thinking that once you take the position there, you might be able to make a very big profit. At the same time, the risk is also very high because they are doing the multi-year trend reversal moves in the denominator currency like USDN and USDCH, and also in the case of Australian dollar and gold, silver. So avoid taking positions there as small traders. Then European session, a drop and firm up towards close of European session could be seen. Then swing and drop moves are expected. It depends upon the volume. If the volume is relatively high, then the drop could happen. Otherwise, it might be a subdued slide. Then tomorrow, Euro and GBP are expected to firm up once US come out of holiday, and afterwards they are not going to sustain the highs, and they are expected to slide again from that of Wednesday and Thursday. After the BOE and the ECB rate announcement, they are expected to make further drop, and Friday there could be a pullback. So sequential trend reversal is happening in those currencies I mentioned and also commodities. And watch that carefully. Now they are handling the yen cross. Okay. With regard to initial lows and the highs, they breached about 5 pips in the case of USDN. It was a slow move, but slow drop in the case of Euro and GBP also at that time. So they could deepen that drop in the case of USDN and also yen crosses, and then subsequently gain the levels from tomorrow. In case if it is a very quick drop, then the reversal can happen on the same day. So I made a mention about the players are going to get caught vulnerably. So wait for it. And this is 2011 and 2013 and 2014 will come across big flash news coming out in the market. So if the players are able to safeguard their money, probably they will not face much of a problem. Otherwise, there is going to be a big trouble for them. So I take this opportunity to thank FX Street and also you people who have come here to listen to my webinar. We'll meet again tomorrow and continue our market analysis during the Asian session. Thank you one and all. See you tomorrow.